Another flat trading session by the markets today. SPY closing just above 597, up 0.07%. You can see over the last three trading sessions, we've traded in a really narrow range here. The major GEX levels that we're looking at here is the 600 level to the upside, which we have not been able to break out of that over the last few attempts. And on the downside, we've got the 597 level here and the 593 level here. So this is quite a congested zone. And this reminds me a lot of what we actually saw for 3 or 4 weeks in October. We saw a very congested zone, which was really just a 1% trading range for 3 or 4 weeks on the S&P 500 and the SPY. That was followed by a little fake breakdown on the downside before the election came in, and we saw this huge rally that we've had over the last week. One thing I've pointed out in the last couple of YouTube videos here is that the second largest gamma exposure concentration is all the way up here at the 615 strike on SPY, and we see a very similar picture on the S&P 500 where some of the larger gamma exposure is a good 2 or 3% higher. So it's possible to continue seeing a consolidation in this range here. It's even possible to see, similar to late October where we had this fake breakdown here, we could see a little fake breakdown maybe into the 590 level. That is one possible path scenario, but ultimately the market is positioning for continued buy the dip. So whether it's consolidation here in this range, a dip lower, the market is positioning that this will all be bought up into year end, and we could potentially end up well over the 600 level and the 6,000 level respectively on the SPY and the S&P 500.
Anthony, in the past we've talked about the inverse relationship of the VIX and VVIX that occurs at times and how that can be a potential indicator of a VIX spike in the future. But I've noticed 2 out of the last 3 days saw VVIX, the index that measures the future expected volatility of the VIX, has been positive. And if we go to the VIX, though, VIX has been very consistently negative. So that qualifies as a negative correlation for 2 of the last 3 days. That, to me, is starting to become a number of repeat occurrences that warrants some extreme caution. We don't know when it'll be, but the more of these days we see strung together where they're moving in opposite directions, the more likely it is that we see a VIX spike.
Thanks, Sean. Take a look at this S&P 500 heat map. This is the performance by sector over the last week. Look at where market leadership is coming from. It's electronic technology, tech services, retail, financials, everything you would expect in a bullish market environment. And if you look at where most of the red is coming from, it's coming from healthcare, consumer non-durables, process industries, utilities, everything you would expect to not be doing as well in a very bullish environment. So even though we are seeing some sector rotation, even though the Mag 7 and financials and retail trade have all been making a pretty sizable comeback here, especially over the last week. So definitely something to keep in mind as we head into year end.
So Anthony, yesterday you mentioned SMH, and that got me looking at Nvidia. Just looking at the chart here for Nvidia, you can see that we did have a red day. And interestingly, this whole moving average, once again, the decline stopped at a 146.27. The whole moving average is 146.29. Let's take a look at the gamma picture, because as far as I can see from the chart, we still have a uptrend that's preserved. And I like this 146 area as a stop loss for my trade on the long side, with 140 below that if we end up losing 146 tomorrow, by the close. Let's go over to the gamma picture. We have this G1 dealer cluster level at 150. We also saw pretty strong volume today at 150, and we did not have a lot of volume at lower prices. We have positive gamma. It's been in a choppy uptrend since October 31. For November 15, that 150 strike is the largest gamma cluster. So not only do we have a price target based on gamma that's a few dollars higher than the current stock price, but it's also very near term. being situated on Friday's expiry.
Thanks, Sean. Yeah, you mentioned SMH, and we actually brought this up in last night's video. SMH having a little bit of a down day today, down 1.67%. We mentioned this 245 GEX and 240 GEX. These were on the downside, two levels that we were watching for. So we made a further move, the last several days and today in particular towards that 245 strike. If you look here over the last month or so, we've been sandwiched really between 245 and 260, just chopping around all through these levels. And last night we mentioned the distribution not really giving any major advantage to the bullish or bearish side, but the largest GEX concentrations were to the downside. And so, as we mentioned yesterday, it wouldn't surprise us to see a further move down. Nvidia, though, is an outlier. It can still perform well, even if the SMH is flat to down. So I think that's interesting what you brought up, Sean, with the 150 gamma exposure concentration. I think that would leave SMH still within this major zone here, even if Nvidia were to rally, 2 or 3% up into that major GEX level. So something to keep in mind there on SMH. We're going to be continuing the conversation in our community Discord. We invite you guys to come join our Discord. We've got a number of free channels. Definitely something you want to check out. I'll put a link in the description below. Also, be sure to check out our website, geeksoffinance.com. You can become a member and get access to our gamma exposure and option flow analytics tools. I'll also put a link in the description below for that as well. Thanks so much, everybody, for watching, and we'll see you guys in the next video.